Good afternoon. George Cavaligos for HFT Bonds. You guys have heard me say this before. May you live in interesting times. The old Chinese curse. It doesn't get any more interesting than this, does it? Overnight, a lot of risk-off trades going on. You know, the commentary from Harry Reid yesterday about no progress being made on the fiscal cliff really hurt the market sentiment. Bonds and notes rallied. We made new highs for the move pretty much on the London opening this morning. Had a little bit of a dip, and then we ripped them higher and made even higher highs this morning on our time frame here in Chicago. Now what? Well, the markets did some strange things today. You guys have heard me talk about how when the yield curve steepens, that's usually a bearish symptom. It's not always. It usually is. Well, we saw the curve steepening quite a bit today in the face of, Beckner and Hilsenrath stories that, when Operation Twist ends at the end of the year, the Fed's going to continue to buy bonds. They're just not going to sterilize them by selling short-dated notes. So they continue actually amp up QE3, supercharge QE3, and by practically doubling it, if they go through with what these newspaper articles are saying. How come we didn't rally more? I'm kind of surprised. Well, all right. There were other stories out today, too. Some stories out of China from some of their financial people saying that the Chinese are not collecting as many U.S. dollars, so they don't need to buy as many U.S. treasuries as they were before. We've been noticing that, overnight sell-off stuff. It hasn't been as consistent lately, but the early evening, the Asian session, barring any surprises from their stock markets, we have continued to see sporadic selling out of the Far East in treasuries. Well, we went through 2 Fed buybacks today, a 5-year auction that went great, numbers that were weaker than expected, and we have a bearish reversal in ultra bonds. The bond futures are throwing up a doji. We've still got about, another 10 minutes before the Globex close here. The bonds are putting up a negative-looking doji candle. The 10-years are the only things that are still holding up really well. Not sure what's driving that. Maybe the Fed's doing a lot more mortgage buying here the last couple days, and that's starting to kick in and holding the 10-year up. Because remember, the mortgage guys always hedge their mortgage portfolios. Not always. 90% of the time they hedge their mortgage portfolios with 10-years. So the 10-years have held up. They are actually poking a slightly lower low. So we have, after the highs this morning, we broke, rallied. We didn't make a new high. And then we broke again and made a lower low. I've just sent out some, comments in the chat and on Twitter pointing to the 150.26 level on the bonds as a possible target. That is the C equals A target. If this is a corrective move, that area should hold and start seeing some buyers come in there again. Tomorrow we have GDP here in the States, supposed to be strong, up 2.8 over last time. I think it was 2%. We also have another buyback tomorrow. It's not a double buyback like today was, but maybe these buybacks are starting to lose some of their oomph here. They're buying maturities of 2021 to 2022. So what's that? The 7-year, 8-year stuff they're selling tomorrow. The Treasury's selling the 7-year note tomorrow, and the Fed's buying them. It's just crazy stuff. I don't know what to say anymore. Tough trading day. Headline risks, getting whipped around. I think I made 3 trades today, 2 losers and 1 winner. Not good. Wasn't bad, wasn't horrible, but it wasn't a great day for me. I should have had a better day. Equities had a nice recovery. I don't know what to make out of this. We've seen situations like this lately where we'll see these big reversal days. We'll get a little bit of follow through. Say early tomorrow, we'll get a little bit of follow through. Equities will go up, bonds will go down a little bit more, and then they'll reverse again. So just stay nimble. We're in this big corrective pattern on the treasuries here. I can't. My favorite account says we're going up in a B wave. B waves can go and retest the old highs. They can also make a slightly higher high in an irregular fashion. I don't know. I don't see it. I figure with all the Fed buying and all the bad press and all the bad stuff that's going on, we should have already taken out these old highs. And we haven't. So, that's one of the reasons I'm leaning towards the more bearish side here. Probably been a little bit too bearish over the last couple of days especially. Haven't caught a lot of this up move. Even though I think Monday I was talking to some of the guys in the chat room and I was asked a question about what I thought, and I said probably a little higher, still in range, but on reversal alert. I hope you guys were aware. I pointed out today was a minor cycle turn date. These things they've worked. Last week's cycle reversal worked somewhat. That was a major cycle reversal. And now we've got today's minor cycle reversal. Next 2 days we got buybacks. I think we get a little bit of further downside in the treasuries, say overnight here. I wouldn't look for too much on the 10-year. Say the bonds get down to that 150.26 level. You might want to take a shot at the buy side with a late stop. On my personal Twitter, there's a gentleman from Europe. Brink is his Twitter handle. He put out some really good bond charts. He highlighted, I think, 150.26 and 150.20 as another fib extension. So kind of watch those levels. Look for bullish reversals down there. Maybe put us all along on there into the buyback tomorrow, and then we'd sell it to the Fed tomorrow and be done with it for the weekend or whatever. Okay, that's stuff.